very solid set of numbers from Tech Mahindra. There is a big beat on revenues. The company has reported a dollar revenue growth of 4.1%. In constant currency, it's a growth of 5.4%. And we were estimating, revenues of just about 2 to 3%. So compared to our poll, it's a big beat. Yes, there was a contribution of the target acquisition that they did. But even if you look at the organic constant currency growth, it's come in at 2.8%, and that is fairly healthy. Margins have improved by about 90 basis points, though you could, say that the margin expansion was a tad lower than what the street was anticipating. The profits are also higher, 31% increase on a quarter-on-quarter basis, but that is largely led by a forex element as well as lower taxes on a quarter-on-quarter basis. Deal wins have picked up substantially at $350 million versus $275 million in the September quarter. Nomura, they have a neutral rating on the stock. They say it's a decent quarter. They've raised the target price marginally to 500. They say that yes, Q3 revenues were a positive surprise, but that is largely on account of the increased revenues from rest of the world, which is a volatile segment. It's not coming from your US, Europe, etc. And they're saying the reason why, despite such a big beat on your revenues, the margins are only in line with estimates, and that's because the rest of the world typically has lower margins, and that's where the incremental contribution has come in. So, they're happy with the quarter, but they continue to maintain a neutral rating on this stance. But the stock, I think the street is going to like the numbers on the whole, and the stock could be in the green.